Holy hell, folks! You won't believe the mortgage madness that unfolded in the UK this June. Lenders approved a jaw-dropping number of mortgages, totally smashing expectations, while remortgaging approvals skyrocketed to heights we haven't seen in over 2.5 years, according to the Bank of England's mind-blowing stats. Get this, net mortgage approvals shot up by 900, hitting a staggering 64,167 in June. And don't even get me started on remortgaging. Those approvals jumped by 200 to a whopping 41,800. This is the highest remortgaging number since October 2022, when we were talking about 50,000 approvals. Can you believe it? These strong figures scream that the UK housing market is back on its feet, strutting its stuff after the tax break for homebuyers wrapped up in April. Nathan Emerson, the big cheese at Property Mark, was all smiles, saying, "This is a fantastic sign, especially when the economic outlook is looking about as sunny as a rainy day and potential tax hikes are looming on the horizon." And here's a kicker. First-time buyers earning a mere £30,000 can now throw their hats in the ring for a mortgage. The Chancellor's Leeds reforms have sent ripples of positivity through the mortgage market, encouraging lenders to roll out new products aimed at helping those with lower incomes take that exhilarating leap onto the housing ladder. But wait, there's more! Net borrowing of mortgage debt surged by £3.1 billion to a whopping £5.3 billion in June, compared to a mere £2.8 billion jump to £2.2 billion in May. The annual growth rate for net mortgage lending ticked up from 2.6% to 2.8%. That's some serious action right there. Gross lending hit a jaw-dropping £23.9 billion in June, soaring from £20.6 billion the month before, while gross repayments also rose to £18.8 billion from £17.6 billion. It's like a roller coaster of numbers. Now, here's a little tidbit. The effective interest rate on freshly drawn mortgages dipped for the fourth straight month, landing at 4.34% in June, down from 4.47% in May. But hold your horses, the rate on outstanding mortgage balances crept up slightly to 3.88% from 3.87%. What the hell is going on there? Jason Tebb, the president of the market, sees signs that affordability is easing thanks to 4 base rate cuts in the past year and some relaxed lending rules. He said, with buyers now having to deal with higher stamp duty costs since the end of the concession, further rate cuts would be a damn welcome boost for the market as we roll into autumn. The Bank of England held interest rates steady at 4.25% in June, but everyone and their mother is expecting a cut to 4% in their August 7th meeting. That could bring some much-needed relief to UK households. What a wild ride we're on, huh? Buckle up!